warm welcome. You're joining us at Hyde Park on AdaDerana 24 as we bring to you current affairs topics and important discussions pertaining to the Sri Lankan economy and news-making headlines from across the globe. Tonight we will be talking about, once again, about the SOE restructuring effort. But this time, especially because last week we heard of the Securities and Exchange Commission's approval for the creation of a new listing board and new listing rules for state-owned enterprises. With that, we'd like to talk about laws and regulations that will govern state-owned enterprises in the process of restructuring and the general economic sentiment. I've invited to our studios to discuss this, once again, a panel of members who are experts in their very own areas. I'd like to first introduce the chairman of the Colombo Stock Exchange, Dilshan Wirasekara. A very warm welcome. Thank you for joining us.
Thank you for having me, Indeewari.
We also have with us a member of the State-Owned Enterprises Restructuring Unit, Mangala, Yapa. A very warm welcome to you too, a former chairman of the Board of Investment. So we'd like to talk about that aspect as well in terms of investments into the country. And we have with us former CEO of the Colombo, or rather the Ceylon Chamber of Commerce, Manjula Silva. A very warm welcome to you. You are a former Director General of the Public Enterprise Reform Commission. So there's much to talk. But first, a general question. In terms of SOE restructuring and the approach that the government has taken right now, what is your overall overview, view and forecast for the economy? I'll start with the CSE Chairman and then we'll move forward.
Sure. So I think it's something emanating out of the crisis in Indeewari that has necessitated us to look at our SOEs, because as we all know, most of the SOEs have been a burden to the government, to the nation in terms of losses that they are accumulating. So I think that's the starting point and why we've now sort of embarked on this path of reform. In terms of how we do it, we at the Colombo Stock Exchange always believe that there should be a very transparent process and a platform that was created that will allow this listing to happen, but also make it attractive for potential investors then to acquire these businesses. And we felt that if you do it in a framework of a listed entity, that would actually attract more investors in, potential investors in, and could really be the catalyst to get this going. So that's where the Colombo Stock Exchange, along with the Securities and Exchange Commission, jointly came up with the idea of having a separate board. Now we know we have 3 boards already, the main board, the Dirisavi, and the SME board. But we felt that given the current criteria of the listing rules, that it may be tough for some of our SOEs to conform to them from day one. Mm-hmm. And that's why we felt that if we have a separate board, that these entities could get listed and there could be a gradual process where they start conforming to the regular rules and use this as a platform to potentially then migrate into the other boards thereafter. So that's essentially the thought process of
and moving on to Mr. Mangala Yapa also here, I think this, as Mr. Wirasekara said, there is coordination here also across the board in terms of the CSE, whether it's the SOE unit or other stakeholders coming together to figure out a way. So what's your overall view?
Indeewari, thank you very much, first of all, for inviting for this, I would say, timely and important discussion. I just slightly beg to differ from Dilshan on one point, that the crisis brought the SOE kind of situation, but it was, I think, right along it was coming. I mean, we all saw that happening. I think all citizens in this country was privy to what was going through with the SOEs. But unfortunately, various attempts made by successive governments to kind of restructure SOEs had somewhat not materialized due to various political and other reasons. And the crisis kind of epitomized it. Now we are at a point where we can't get out without addressing this issue. So I think that is one point I would like to make. SOEs has been started at different times, but various governments with good intention to address certain issues in the economy. But they have not restructured, they have not evolved, they have stagnated in that situation for a very long time. And today, by and large, I think everyone realizes that SOEs has become a big burden to the government, because majority of them are financially not sustainable. That's a major problem. Second, in terms of the quality of service that they provide, I think the public as users are certainly not happy. You could ask anyone across the spectrum of the society, I think the vast majority will agree that they have not performing. So this is a sad situation, because as a professional, I'm a professional engineer, that's my background. Most SOEs are run by Sri Lankan professionals, but unfortunately they have failed to live up to the expectation of the nation. So we are forced at the moment, or rather compelled, to go through a restructuring, and I think all institutions like the Securities and Exchange Commission, the CSE, the ministry, the other ministries, even the SOEs themselves are kind of, I wouldn't say, they're working together. That's something that is very good. So I think we have a good opportunity to at least address some of those issues positively at this time.
Mm-hmm. And turning to Mr. Manjula de Silva, I think you were former CEO of Ceylon Chamber of Commerce, but essentially former DG of the Public Enterprise Reform Commission. And now we're seeing an expedited effort here. Well, thanks to the crisis, really, that we've really thought about looking at these institutes, unbundling, or whatever we call it. How do you see the situation currently, and what's the forecast in your expertise?
Yeah, thanks, Indeewari. So actually, I'm very happy to see the progress that is being made, because as you know, like there was quite a long period where there was very little SOE reform. But before that, actually, if you look back, I mean, we did have a period where, I mean, we had something like within a period of 13 years from 1989 to 2002, there were something like 84 SOEs that were actually privatized. Mm-hmm. So this is something that I think a lot of people have forgotten about, but that was a period where actually two successive governments led by two different political parties still pursued that agenda. But of course, since then, I think we have had this long period where very little action took place on the reform front. So it's very happy to see, though it has been triggered by the crisis to a fair extent, that something is now happening on the ground. So we have the SOE reform restructuring unit being established, and they have already started appointing transaction advisors for a number of transactions. Then we also see this new board being set up on the stock exchange, which is very good actually for particularly if one wants to keep the majority ownership within the government and then maybe release a part of the shares to be listed on the stock exchange. I mean, this will be a very good instrument to do that, because when you look at SOEs, you can't actually apply a broad brush kind of an approach, because each one is different. Exactly. So there are some entities which are of strategic importance, which maybe the government may wish to continue to keep within government control. Mm-hmm. But at the same time, you may still want to bring in some disciplines of the market by taking them to the stock exchange. Right. But there are also others, I think quite a large number, where there is absolutely no case to retain them under state ownership, and those can be divested. And we are glad to see that process has begun. And I would say, like, maybe out of the 130 odd or so commercial enterprises, maybe something close to about 80 one could easily divest.
Mm-hmm. And in terms of now the new listing rules, that's the highlight of our discussion today too. But what really are these new listing rules and the new board really? Is it essential? Couldn't you have facilitated this on the Dirisavi board itself?
Yeah, so no, Indeewari, because then what would have happened is we would have to make ad hoc exceptions for certain criteria or listing rules and exemptions of those to the entities, which wouldn't have been sort of good practice in my view, because then you're having a set of rules for some institutes that are listed on a board, but making exceptions to others. And we felt that that was not the way to go. So we felt that, especially with the criteria, the initial listing criteria, so some of the exceptions we've made are on the minimum capital requirements, the track record of profitability, the net asset positions that require. So we've looked at these institutes and we've actually had discussions with the SOE restructure unit to figure out what entities they're looking at, maybe trying to privatize initially. And we've loosened the criteria somewhat so that these entities can come up now. For example, even we'll say audited accounts. The listing rules have generally 45 days or 60 days for your quarterlies to be published. Now, annual reports, 60 days, audited financials, all of that. Now, while private companies can do this, if you look at a state-owned enterprise and the dynamics of that within government, it's going to be very, very hard. I mean, the Auditor General, I don't think, can complete these tasks and have that within the time frames. So that's where we've sort of, I would say, loosened the criteria. And we felt doing it through a separate board is a better option than trying to make on exemptions on a case-by-case basis. Of course, this is a transitional board. How we see it is, we've given a period of sort of 5 years for these SOEs to come on board, get listed, and then start complying to these rules and ultimately migrate. That's the objective. It's not to remain on the SOE board.
Right, right.
So that's why we felt a separate board is a better option. And again, these came about through discussions. This is not just as SEC or CSE thinking that's the way to go. This is with discussions with the SOE restructure unit, with government officials, all of that, and then coming to some sort of a compromise that this is the best option or the way forward.
Right. I think it's time we take a quick commercial break here. We'll return to discuss more on the SOE restructuring unit and especially how the state-owned enterprises, the listing process, and how you can attract investors going forward to Sri Lanka after this short break. Welcome back. We're in conversation with a panel, an eminent panel that will address questions about the SOE restructuring effort. I'd like to turn to Mr. Mangala Yapa as a member of the State-Owned Enterprises Restructuring Unit. Now, questions can be and concerns can be raised by the general public who have funded these state-owned enterprises over the years. It's the people's tax money that is funding these SOEs. So, and with the restructuring effort, private entities, investors will come in to fund them, yes, and make them profit-making entities, but eventually all the rewards to the private sector. So there could be concerns about, we have been funding this over the years. So what's the fairness, justice to the people who have been taxed and paying these tax money to fund state-owned enterprises?
Yes, indeed. I think there are many questions, and I think Manjula very correctly said that if you take the entire set of cohort of state-owned enterprises, you can't just use a broad brush and look at them. There are different. Each entity is unique. Maybe certain similarities are there in some are in commercial kind of in a situation, some are in purely services situation. So we are looking at them holistically, differently, and finding the best possible way that it can be restructured or reformed without creating a burden to the government and the public. So it is finding an optimum solution. So it is not divestiture of entire state-owned enterprises, the whole lot. It is looking at each one it has uniqueness, it is validity of existence. There may be some which are no longer needed to be in operation, because they were started some 40, 50 years back and they continue, because no one has looked at it. So we look at it through I would say with a very fresh, very open and very unbiased kind of a view, and then we would advise the government what we feel as fair and reasonable, so that it doesn't become a continuing burden to the public. Because here the issue is some state-owned entities don't have adequate capital to pursue their businesses. So then what will happen is the state banks and others will be brought in, and they will have to finance some of these projects, or they will have to go for some other commercial or other funding from outside. So you further entangle yourself into a plethora of problems by doing that. So we have to make these institutions sustainable. So in doing that, we'll have to select what suits best for each entity. So some will definitely go through a divestiture process. It doesn't mean that the people will not be benefited. People will get value for money. People will get value for money, because anyway, when you say the taxpayers, you must also remember in Sri Lanka, 85% of the government revenue tax is from indirect taxes. So it is not only the rich that is being taxed, it is also the poor that is being taxed, and that money goes to sustain these entities. And some have been not necessarily performing very well. So
Not at all.
Not at all. So that is the broad understanding.
Yes.
So therefore, as we move on, so it is not just one kind of action.
But the questions about pensions, I've spoken to this, spoken to other experts also about this, but pensions and other upon retirement schemes that are available for the state sector, how will that be facilitated under a new management of?
So all these aspects will have to be taken into account. Each entity has different approaches. Most of them are, I think, paying EPF, ETF, that kind of arrangement. Some there are other mechanism. Now, Dilshan earlier said about certain kind of diluting or bringing down the rules. Some entities have not prepared annual accounts for the last 5 to 7 years. So honestly, we don't know what is the financial status of this.
But then in that case, how does it work when they want to list on the Colombo Stock Exchange without proper?
So you can't list an entity that doesn't have audited accounts for 7 years in Indeewari. You will have to audit those accounts and bring. But there are certain exceptions from an ongoing reporting basis.
Correct.
So, for example, if we say audited financials have to be submitted 60 days after your financial year end, we will give a longer period of time for that entity. The delisting rules, if you don't comply, would again be loosened. So we won't, as normally, if you don't submit it, you will say get delisted eventually, trading suspended. We would say no, okay, we'll give you a longer period than the 60 days, maybe 90 days, maybe 180 days, so that you can comply. So that's really the criteria. I don't think we are waving off the rule and saying you don't have to have financials. So that's something important. I'll also like to just add to what Mangala said. I mean, if you look at entities, there are fairly profitable SOEs that can also be listed and somewhat privatized. You don't have to lose control. This perception of we are selling off national assets needs to be looked at from another lens. A good example is the state banks. Now we know People's Bank and Bank of Ceylon command close to 50% of banking assets in this country. They are the two largest, right? Now they're profitable also, right? But on an ongoing basis, they would need capital infusion to grow and maintain their leadership status. The government doesn't have the cash to do that. So a good way is to sort of privatize it, not in its entirety, to sell a stake. And I think the president made some comments 2 days ago in New York that they're looking at a 40% sellout of the state banks, retaining 60%. So you still have government control of the entity, but you're bringing in new shareholders, bringing in new ideas, new concepts, investors who can add a lot of value on the tech side and other things, and divesting only a minority stake. that would take care of the future capital requirements of that institute and make it sustainable and profitable in the future. So I think we have to look at it from a different lens.
Do you think this will work, these models for Sri Lanka, especially given our past, our reputation in terms of working with investors and our ease of doing business environment? We're looking at foreign investments coming in, and we're talking about government and private sector partnerships. So will this model work, and what would be the sentiment here in Sri Lanka?
I think there's every chance that it could work, if you do it the proper way. So just to add to what Dilshan was saying, actually an institution like a bank can even issue new shares instead of the government divesting a part of its holding, because they also need capital, right? So they come onto the stock exchange and make a fresh issue of shares. So that way you actually bring capital into the entity, into the system, right? So which is very much needed. And to address your question, Indeewari, I mean, we have done this before. Like I said, I mean, a lot of people have forgotten. Let me remind you of some of the entities which were under the government at one time and which are today running as private enterprises very successfully, adding value to everybody, all stakeholders, including the customers, the employees, to the government and the society at large. Companies like Ceylon, Oxygen, so many companies, if you look at in the private sector today, which are well-run entities, including Colombo Dockyard, these are all government entities, right? But which have been privatized, and today which are running as a successful private enterprise. So this is where I think we got to understand. Now, when you talk about some of these entities, maybe they are profitable, right? But if you relate it to the amount of assets they are sitting on, right, that profitability is absolutely nothing, because these assets are often not taken at market value. Now, if you take some of the hotels, for example, they are sitting on prime property, right?
Estate property.
Yeah, on which, let's say, if somebody had the capacity to develop that into like a multi-purpose complex, with shopping, entertainment, apartments, that is what we see typically elsewhere in the world, right? I mean, then the return on that asset that you can generate is far more than what you're seeing today, because any enterprise, any commercial enterprise needs an investor with the capacity and the commitment to invest, right? And the government obviously is cash strapped, it can't do that. So if you take, say, plantations, for example, the state-owned plantations, I mean, the government doesn't have the money to even spend on fertilizer. So their yields are at rock bottom level. So this is what is happening, Maybe you make a small profit and manage, but you're not making the optimum use of the assets that are basically under these entities.
Now, we're targeting 1.5 billion US dollars of FDI into the country, but how are we looking at this? Do we have a proper plan, or are we looking at actually the SOEs to lead the way in bringing that kind of investment to the country?
I think if you look back from where we were about a year back and today, things have somewhat moved positively. That's something we all have to realize. 1 year back, I think we would have, if you have something like this was said, the country is still declared as bankrupt, so why would an investor come and buy unless they just opportunistically trying to invest and buy something dirt cheap. Today, I think the situation is somewhat shifted, not fully out of doom, but better. You asked a very pertinent question. Is it only SOE reforms? No, I think reforms have to take place in broad spectrum of the government. A lot of legal reforms are being initiated. A lot of public sector reforms are being looked at. A lot of trade facilitation and trade and investment related reforms are being embarked upon. So I think it is a result of all these things kind of working together that will bring in the different situation in Sri Lanka, different environment in Sri Lanka that will enable attract. You are spot on when you say ease of doing business and some of those indices are very low. Today, on top of that, you have bankruptcy and sustainability of the economy. So it will be a arduous task of promoting investment into Sri Lanka. But we need to address that. We need to understand that is the reality. How do we then address this? I think, therefore, I think the government is working on many fronts, and I think we are on the right direction. How fast and when can we reach there depends on a lot of things, how we are able to implement some of these. As far as SOE reforms are concerned, I think we are moving in that direction, slowly but steadily. So we are hoping that we can realize some of these projects sooner than.
I'd like to come back to the laws and regulations that will be governing SOEs, but before that, the CSE itself. You spoke about the SME board that was introduced for the small and medium enterprises. How well are these enterprises doing on the CSE? And the overall performance of the CSE, we saw challenges, we saw ups and downs, but I know the Colombo Stock Exchange and the SEC, we've spoken before, had greater plans for the stock exchange. How far are we in achieving those?
So I would think we've had very moderate success with the SME board. I mean, if you ask me personally, I'm not happy. We've had about 5 or 6 entities listing on the SME board. But it was a bad period in the very, so we had 2 years of COVID, the next year the financial crisis, not ideal market conditions for businesses to list. Obviously, the impact of the crisis and the economy has mirrored itself in the stock exchange, and you would expect that to happen. So while we had a good year in 2021, 2022, we had a 40% decline in markets. Even current valuations are not at a point that is encouraging for companies to list, because a shareholder essentially is looking at unlocking value. So when you go public and you offer your shares, you want to get a reasonable valuation for that. When you're trying to raise capital, when you're selling part of your business, your equity. That's been a challenge. Our market is still trading at a 6.5 times price earnings, 1 time book. Businesses are looking at better valuations to get out of listing. So that's been a challenge. But I think the progress we are seeing in the economy, I truly believe we've turned the corner. It's I would say a remarkable recovery, right? If you look at, like Mangala said, 12 to 18 months ago and the situation today, to me it's a case study for how a country has avoided a crisis and come back to a reform agenda. Now, I agree we are not out of the woods, but there is no other country that has had a recovery as fast as we have, and we have to be proud of that. Now, the continuity of that is what is needed, and I think if we stick to this reform path, you will see a re-rating of markets. You will see valuations go up, and then hopefully that will encourage the public or the entities to first list and the public to start investing. So that's something that we think will pan out. I just want to sort of also just add another perspective. In terms of the privatization, you have to look at different dimensions of entities. Now, I think our national carrier has been a hot topic on this. It has over $1 billion of accumulated losses. We know it's a great strain. But it is not just privatizing Sri Lankan to avoid losses that the government. It is the opportunity to make the national carrier a regional player to attract tourism. Because if you have a strong airline that serves the region, it's a game changer for tourism. Right? So it's not just the entity alone. There are a lot of other aspects and spillovers that need to be looked at. And I think that is the lens that we really need to view this and see, how does this really impact the broader economy and certain sectors. So.
Sure. I think it's time we take a quick break here at Hyde Park on AdaDerana. We'll return to talk about this very important topic, state-owned enterprises, restructuring and Sri Lanka's economic way forward. After this short break, to stay with us. Welcome back. I'd like to turn to Mr. Mangala Yapa again. We were talking about FDIs and how the investment climate should support any new investments into the country. But you were a former chairman of the Board of Investment, and since the end of war, we've been talking about how we should facilitate ease of doing business or creating a conducive environment. Now, Dilshan just mentioned that the environment, I mean, our bounce back has been remarkable, yet there is a long way to go. So going forward, with the SOE board, SOE unit rather, looking at how this effort can be brought together, what other rules or policies and regulations are you looking at from an investment environment point of view that you're pushing the government towards?
I think government is also fully aware of the situation and the challenges before them. It's a question of addressing all the issues simultaneously, how much capacity they have, what is the political environment to do all the transformation that is necessary, etc. Because we are all time pressed, because so many things have to be done simultaneously. So I think, personally, my personal view is a lot of steps have been taken, and that has to move forward. As you correctly know, FTA with Thailand is now almost being finalized, hopefully by within few more couple more rounds that will be concluded. I heard President talking about the comprehensive economic and technical partnership agreement with India, which was stagnated, which will move, and then we have made a request. We are trying to join RCEP. So these are on the trade side very proactive, positive movements. But of course, one thing is saying that, the second thing is getting that done. So that means a lot of tariff liberalization and other reforms will have to happen. Customs procedures, trade liberalization will have to take place, so that will enable, once that area, particularly because trade and investment are intertwined, interlinked. There's a nexus between the two. If the trade side gets more liberalized and more reformed, naturally that will also create a larger market, because as you know, India and the subcontinent is growing at a massive pace. So with that, Sri Lanka becomes a very attractive place for investment. While the crisis and other problems are there, but that is good for us to realize that is where we are, and then to build upon that. But that side, I think, is being addressed. So there is, as I see, there is a concerted effort to focus on the trade and tariff liberalization and that side, to create a bigger market for Sri Lanka, and then also work on the FDI. Probably it may not necessarily be on incentives, tax and financial incentives as such, but on some other basis which we need to work out. The government has to also come up with this thing, and then move forward. So there are some initiatives taken, and I believe these will definitely enable, because without FDI, the country doesn't have enough financial capacity to sustain development. As of now, we are negative growth. We hope things will be better in the next quarter and thereafter. But where would the finances come to drive growth? It has to come from foreign direct investment. It can't be, once again, commercial loans and other things which will drive development in Sri Lanka. That we have learned a bad lesson. So I think everyone realizes that is not possible. One other thing before I conclude to add, Indeewari, is now you asked earlier, all these SOEs are funded by the people and funded by the government. Is it where the government should put their focus on? For example, operating and running an airline, or providing quality education to the people, quality health services to the people. So if government is cash strapped, it doesn't have finances, it needs to focus their priority areas, how they can serve the people better with the tax money, rather than putting these things on various institutions for the benefit of a smaller number of, I'm not saying those employees should be disregarded, no, they have to be taken care of. But that can't be the priority. They can't be bleeding the economy. So that's the way we need to look at it. We need to understand where the money should go to build capacity for the future. Education, health, nutrition, security for the investors to come and invest, and stable country, stable political system. All that has to happen. So I think that's where the things will have to move, not maintaining state-owned enterprises. They will take care of themselves.
I think you might have something to add to that also, Mr. De Silva. We're talking about an environment here, but again, to attract investments, we have to show the world about how ethical our practices are, our labor rights. So what structural reforms do you see that the government should be taking, or do you propose be taken going forward?
No, certainly. That's another important area. Basically, the corporate governance has to improve tremendously. If you really want to even market some of these SOEs to the foreign investors, that is one thing we need to focus on. So that is where actually getting them listed on the stock exchange, that's something, which will expose them to some sort of discipline. And another important aspect, I think, which we could not talk about up until now today, is that the government has a plan to set up a holding company, which will act as a kind of a mother organization
for SOEs.
For the SOEs. Because see, whatever that we may divest, it will take some time to get through the divestiture program, and there will be also some entities that are strategically important to the government that they will want to retain a majority ownership. But these also, I think we need to reorganize them in a better way. And one of the ways in which it has been done successfully in many other markets is to bring them under one single entity, which is professionally managed and which kind of acts as a buffer between the SOEs and the government. So that is something where actually we can see Temasek in Singapore, Khazanah in Malaysia, UK, GI, that stands for UK Government Investments in the UK. So like that, in most of the countries, they have adopted this kind of a model. And one of the things they do is actually they ensure that the SOEs are properly governed.
Professionally.
And they follow a code of conduct, and the boards are appointed typically by this entity, and where they ensure that there is no political interference in the appointment of boards. So this is something, again, which we are looking forward to, because we understand that the cabinet has already approved the concept of a holding company. So when that is set up, and once the SOEs are brought under that entity, I think we could see, apart from the divestment program, we should be able to see these entities being governed in a much more professional manner. That is something I hope will happen in the very near future.
I have about a minute each for your closing remarks. So I don't want to ask too many questions, but I think there is more to be done. But there is much that has been achieved so far in terms of the work we are doing. So what immediate steps do you suggest that the government or even the corporates and the people take? We're complaining either about the taxes, or we're complaining that there isn't much that the government is doing to give us back in terms of the taxes that have been taken from us. So how can we all come together here to work towards a common goal? We're talking about Singapore, Malaysia, how they've revived, and India after the beginning of the 1990s, they never went back to the IMF. Closing remarks, I'll leave it to our panel.
Sure, I'll go first. So I think, necessity is the mother of invention, right? And I think we are at a point that we don't have a choice in Indeewari. I don't think there is any other path than this reform path that includes SOE, restructuring, and eventual privatization or listing. And there's no option. So I think that is an accepted fact. It's not just the private sector, it is government, it is, I think, even public that have accepted that that's a must. So to me, I think there is no choice in the matter. We just need to go through this. The faster we do it, the better. For all of us as Sri Lankans, not just for the government perspective. I think all citizens will benefit by having an efficient, the SOEs being turned into more efficient privately run organizations contributing to the national economy. And that's what we all want to see. So I'll stop there.
Right.
Yeah, I think I totally agree with Dilshan. Now when the crisis hit, it hit everyone across the board, the rich and the poor. So everyone understands that if the economy is not doing well, everyone suffers. Perhaps the poor suffers most because they have nothing to hang on. So from the SOE reforms, we are looking at a broad approach on that. We have already come up with a SOE policy, like said, the concept of a holding company, a new SOE law. All this will enable SOEs to be run, managed efficiently while being restructured and then resisting. So I'll stop there because I think time is short.
Yeah, all I want to say is that nobody is going to lose in this process. I mean, it's a win-win for everybody. And if you look at it in a very simple way, let me end with a small example. What we are trying to do is we are trying to make your assets work for you.
Exactly.
Right? Let the assets generate some income. If you take an individual, right? Let's say a person whose expenses far exceed his income and he's severely in debt and has some properties, right? What will you do? I mean, you're not going to be just looking at the properties and be happy that I'm a wealthy man and then still struggle to live because you are in so much of debt and your expenses are far more than what you earn as income. So what you will do is you will make use of the assets to generate some income. Either you dispose of some of it or you may lease it out. Try and convert your asset into a flow of income. That is all what this SOE restructuring is all about. There's no magic in it. What you do in your day-to-day life, sometimes governments also have to follow the same.
Thank you very much for your time, for your thoughts, and for sharing your expertise with us. We had with us the former CEO of the Ceylon Chamber of Commerce, Manjula de Silva, joining us here tonight. Thank you for your time. And we also had with us member of the State-Owned Enterprises Restructuring Unit, Mr. Mangala Yapa, as well as Chairman of the Colombo Stock Exchange, Mr. Dilshan Wirasekara. Thank you very much for your time and for sharing your expertise here with us. We'll return next week with yet another discussion at Hyde Park on AdaDerana. Until then, take care. Have a pleasant evening. Good night.